Hey, Matt.
Michael,
How are you?
marvelous. How are you?
Good. I gotta get my Garmin on. Get the materials exchange shirt show.
Get your walking advertisement going.
And you know what? As long as I got a second, I'm gonna go get a little bit of get a coffee.
Take your time.
Oh, I got something funny. I'll be right back, Matt.
Sure.
All right, all right.
Feel like you're having a fire drill there.
What's that? That's my phone. Gotta make sure I hear it.
You're not going to miss that.
All the distractions we have in our lives today. Um, so what would you like to start with? I have the
I think I want
big
to go.
one.
I think I want to go off script a little bit.
You're gonna go off script.
Yeah. I think I want to talk about the builders have it wrong.
All right.
Because what the builders are talking about is not how houses are selling and not their inventory, but they're talking about how bad traffic is. So they're sending the message that things are going to be really bad and they're not going to do much. And that's just based on traffic. But the reality of it is they are selling what they're making right now. They're wrapping things up. Business is good in the field. Inventories are relatively light everywhere. And I think the builders we're backing ourselves into an undersupplied housing situation again.
I know where you're going with that. Yeah. I mean, I tell you what I'm looking for. To me, it's all about the Fed.
Yeah, hey, tell me this. What do you? I don't understand why if you think that high inflation is a bad thing because it's going to stop people from spending money, and the cure is to get people to stop spending money so you can lower prices so they can start spending money again. It seems like it's the same thing. Why don't you just leave inflation like it is and people will stop spending when they can't afford it, rather than making interest rates unaffordable? Just people stop going out to eat when it's $50 for a hamburger.
Well, it's good.
I'm not the economics about that, but I don't know.
The reality of it is the Fed put all this money into the market um, through. Oops, I better not do that. During the pandemic, right? And it needs to come out. It just there's too many dollars sloshing around.
There does seem to be an excess pile of cash that.
So inflation is a great thing for anyone that holds an asset. It's a horrible thing for someone who holds debt. And the majority of the population doesn't have an asset. The majority of the population has debt.
Yep. Credit card.
That Therein lies the challenge. All right, it's 11 o'clock. It's actually, I'm sorry,
12 o'clock.
12 o'clock. I'm looking at the wrong one. I just want to pull up on my phone so we can see how many smiling faces are on watching the show here. There we go. Oh, that was previously live. I don't want that one. Ashley Buckholt has taken a much needed vacation. I believe it is his wife's birthday that he has gone on a vacation for. So had he not done that, he probably would have had some issues.
Yeah, good choice.
It's a very good choice. So,
Did you get the that I sent you Did you get the briefing that I sent you this morning?
I did. I certainly did. I take that. There's Ash.
Yep, just landing in Seattle.
What a world we live in. Ash has been on an airplane, and he's still been communicating with us.
Yeah, so are you.
He's been on a few calls, and that's internet is everywhere, evidently. So you want to start with the morning briefing?
Yeah.
That's not that one. That is this one, right? No, I got the Layman's Guide, Thursday, October 6th.
That's it.
Oh, yeah, that is the briefing right in front of my face.
Today,
Turn it on. Here we go. And I need to get this out of the way because we have begun.
Here we go.
All right. What do you know?
People showed up.
Let's see. We've got about at least 30 people plus here. Feel free to tell us where you're from. That would be great. Let's say where you are listening from.
What do you say in the South? Where do you stay at?
Where are you staying at? All right. What's happening in Lumberland? We got a guy from Iowa. All right. In capital letters, Iowa. I'm supposed to actually have this up because I'm going to see comments on other venues as well. So, oops, get that over here. So we stream to YouTube. We stream to LinkedIn, of course. We stream to Twitch, and we stream to Twitter.
Yeah, you had a big long list of opportunities to join this morning.
Yeah, that's there we go. I wonder where do I see comments here? Well, all right, let's fire this thing up.
You need Jory back in there.
She's working at a bagel shop this morning, helping her friends at a bagel shop.
That sounds like an underqualified job for her, an overqualified job for her.
It's kind of exciting. The folks that started the bagel shop are some good friends, and it is taken off.
Great.
I got to make that. All right, let's do it, Matt.
All right. Here we go. Let me go first. The introductions.
2020. Okay, Matt Lehman with Lehman's Lumber Guide. Mike Wisniewski, president of Materials Exchange, here, and we're going to talk about the lumber market and Matt's unique way of interpreting things. Definitely, Matt, as I would say, looks at life or looks at the market through the eyes of a former trader and more of a human psychology standpoint, which I think is an excellent way to look at it. Now, I will have one caveat to that. On Tuesdays, we do show with Greg Kuda, and Greg Kuda looks at it from hard facts, straight up numbers. And then Ash has a show on Wednesdays with Matt Beamer and Greg Riley, and they look at it from guys who actually make money trading this market. So I think you've put all three into the mix, listen to all three shows, and it's going to give you a better perspective than you would have if you didn't.
I'll tell you what's interesting. I listened to both of their shows, and it's interesting to see how there is a common thread that we all have, and it's the awareness of what's going on at the root of the marketplace, and the kind of a macro view. And we kind of skip over the many things like rail strikes and labor issues and that kind of thing, but get right down to what's making it tick. And it's kind of exciting. It's confirmation for me sometimes my thoughts, because I think from a kind of a psychological point of view, they can tend to be a little esoteric sometimes, and you can't really base them up with facts. But like, for example, today I was thinking about what could the disruptions in 2023 be like, and what could they possibly be?
Yes.
And the first thing that came to mind was that builders have let us know for the last couple of years that we better pay attention to what they're saying, because they told us in 2020 that things were going to get good, and things did get good, and whatever you did, don't run out of lumber. And the lumber industry took that to mean buy everything you can. The builders are going to buy everything you have, regardless of the price. And we went from $1,700 or 400 to 17 to back to 400 to back to 1,200, and it wasn't as smooth as we tried to in the lumber side tried to make it out to be. So trying to think about what kind of disruptions could we get from misinterpretation or overlooking the obvious of what builders are trying to say today. And when you talk to a builder, they tell you that their fourth quarter is going to be good. They're finishing just like on schedule. They're even starting more than they thought they would, because things are they're a little bit more liquid. And there's two things that are happening. One is the builders are either selling their homes with incentives, or they're dumping them off in blocks. But regardless, there's not an excessive amount of extra homes, new homes being built and accumulated that are hard to sell. They are turning and they're moving. But what the builders are focused on, the ones that I've talked to, are focusing on the traffic, the 6-month traffic and the near-term traffic. And they're interpreting that to mean that things are going to get worse because the traffic is bad. And if you think about why the traffic is bad, it's just a response to what the Fed's doing. The Fed's trying to scare everybody out of buying bicycles and bread and toasters and houses and cars and everything else you can spend money on, trying to get us to roll back our spending. And for whatever reason that is, because if the high prices don't roll back your spending, I can't imagine anything else that will, but other than interest rates. But regardless, we're curtailing our spending, and it's keeping the housing market still continuing to liquidate its homes. The other thing that popped up this week was when Ian came through Florida. One of the things I heard from Bob on an insurance side of the picture was that the builders are going to think twice about building back on oceanfront properties like they did, to the extent that they did, because the insurance costs are going to be so high. And there's floodplain, not just there, but floodplains areas that have been all over the country. We've had floods like crazy this year. A lot of places are going to they're not going to get rebuilt like they were before. It's going to be a slower process anyway. So those are kind of a little bit of conflicting information.
Yeah, I've been thinking about the home building for 2023 as well. And I'm looking at two things. Number one, mortgage rates are almost 7%, just around, touching almost 7. On a 12-month annual basis, for every $100,000 of home you have, that's a $7,000 cost. So then you take a look at what's the average home in the U.S. is around, let's call it $350,000 to $400,000. That's $25,000 a year that you are spending just to rent the money to buy your house, approximately, right? Now, it's previously when the mortgage rates were down at 3% or 4%, it was half that. And that's per 100,000, or no, so that would be total. So like $12,000 more to build a house or to buy a home. The average home today, it's $1,000 a month.
I just heard a statistic a minute ago on the radio that said that the same $350,000 house is now $650 a month higher than it was. It was $1,300 a month, and now it's $1,900 a month. So basically, a double the interest rates have increased your payment on your house by 50%.
And in addition, if you buy a car, money's just more expensive. So what I think we're going to see are some smaller homes in the short term. And I think we're going to see more starter type homes, because why would you move up right now? If let's say you bought a home in the last 5 years and you have an interest rate that is so low, why would you change your home, which would cause you to get a new mortgage and have your payment go up?
Yeah, especially by 50% or even 30%. Yeah, it seems like that there's going to be that maybe the thing that the builders are realizing too is that there's the incentive to move up is not there at 6.5% or 7% interest rates. But like you mentioned the Fed earlier, like there's no reason to expect that interest rates are going to stay at 7% when you realize that we just had this tremendous growth experience with 2% interest rate, and the only thing that happened was that is we just got so excited about it, we just went out and started spending money like crazy and borrowing and burning through it and doing what the Fed wanted was to grow the economy, and we just outran the Fed's expectations, I guess. But it's like we said before, that when you got 4 or 5% interest rates, don't seem like a good deal coming from 3, but they're a pretty good deal coming down from 8 or 7.5. So I think if we settle back down around 4% or so for interest rates for long-term mortgage rates, then I think we're going to be back off booming again.
Yeah, and the interesting thing coming out of the financial markets right now, there's a light at the end of the tunnel. We think some of the data coming through is such that the interest rate hikes are having their intended effect, and things are slowing down.
Mike, we shouldn't be surprised when the rate of slowing is rapid, because at 3/4 points 3 times in a row, that's the Fed's expectation is they want to slow the economy quickly, and when it happens, we shouldn't be surprised that happens. We ought to be almost kind of relieved to say, well, it's working, so maybe it's going to last. It won't last as long as some prognosticators would think. That it'd just be a kind of a burp or a hiccup rather than a great big old puke.
Right, and then the strong. We've been talking about this. The strong U.S. dollar has the effect of importing deflation, exporting our inflation.
Exactly.
So if our dollar is strong, we can buy more. The euro is basically at parity. The pound has gotten crushed. So everybody wants to send their materials or their goods, services, materials, their people here to the States. It definitely imports deflation. So, just looking at your disruptions here, the new home builders are dumping blocks of new homes to investors at 20%. There's something in the tea leaves there, which is if you don't have to borrow money, you can buy this asset of a home and rent it out. Rental rates have are quite high. What rental rates being high is an example of there are more people looking for units to, places to live than there are places available. So, I think that I don't think the builders are going to have a difficult time clearing their inventory.
I agree. If anything, we're probably going to see is everybody's all excited about the multifamily part right now. The multifamily's booming, and just because of rental, but if you get an opportunity to rent a home for pretty much the same price you can rent an apartment, 3-bedroom apartment for, you're going to opt for the home. And I've got several multifamily clients that tell me that things are slowing, that the rate of inquiry and investment for 2023 is going to be substantially less than it is in the fourth quarter. It's just already starting to. Things are not starting to. They're getting where they don't pencil out because of the rents and the kind of capping of rents. The rents have kind of backed off a little bit, but it feels like the multifamily. Not that it's going to implode, but it certainly feels like it's peaking.
Yep. So then you're talking about the year of the floods and these hurricanes. I agree. I think people are going to reassess where they want to live, and the advent of white collar workers are able to work remote quite easily. We're gonna see people living where they want to live, not where they need to live.
Yeah, I think it's forcing people to go back to the workplace is going to get a lot of rebellion, and despite Elon Musk's endorsement of it, people can find other jobs where they can work remotely and don't have to go back into the cities, and they're probably not going to do it.
So let's talk about this one. This is kind of interesting. Precision railroading business model is based upon longer trains carrying multiple cars from large origins to large destinations. Rail strike may continue. R&Rs. Rail strike may continue. R&Rs will decrease single order. It's like lumber in lieu of grains, chemicals, coal, and oil.
Well, if you think about, I don't know, I always got excited when I was first started getting in the lumber business when a train would come by and I would count the number of lumber cars that were on the train. And if I saw 4 or 5 in a row, I'd get real excited, think, well, that's great. There's lumber. That's what I do for a living. There's lumber going down the track. I wonder if that's something that I sold or something that I could buy or whatever. Now trains come by and there are like 300 cars of containers with no lumber cars on it. Or I live near a coal-powered power plant here for Duke Energy, and they bring 200 coal cars in, just a whole trainload of just coal cars. And Canada's in the middle of having a bumper crop for grain this year, which is perfectly good timing with Ukraine being kind of out of the picture. So there's going to be an urgency to get more of those Canadian rail cars to carry grain and coal and oil out of Canada rather than lumber. This is the way Kip Fothering's been on the show before. And Kip was telling me yesterday. He said, "Think of it like this: if you could go to a coal plant or an oil refinery or whatever, you could load up 100 cars. You could take them to one place and dump them off. That's more attractive than picking up 4 cars from West Fraser and dropping it off to 4 different places across the United States. It's just the precision railroading model doesn't fit lumber distribution or lumber shipments from sawmills. And so I think that's opened up a big opportunity for large distributors. Some of the large contractor yards that have the ability to put wood in storage and reloads, and it's probably going to change the whole. I think it'll change the landscape of how lumber gets distributed. If you can go to a mill and say, I'll take all your production and ship half of it to Chicago, half of it to Memphis, and those are your 2 destinations, or you take a third to Chicago, a third to Memphis, and a third to Atlanta, and you just have these multiple distribution points. And we've already seen the market showing us right now that the end user will pay a premium for prompt shipment wood in smaller quantities, not to have larger inventory. So I think there's going to be a shift that goes in place. And right now, it seems like there's this huge moment of indecision. Everybody's under the impression that the market's underbought, all the way from wholesale distributors, all the way through reloads to down to framers or whoever's at the bottom end of the pecking order. That the market is on the light side of underbought. It's certainly not adequately bought, but the wholesale side seems to be of the opinion that the market is underbought, but their customers are of the opinion that they are adequately bought. So, like Tim Hansen mentioned, lumber futures are strong this week. That's for a couple of reasons. One is, I think the primary reason is the wholesale sector of the market has been talking $400 as being a value area, and we're at a place where the downside risk is minimal, the upside risk is more excessive, and it's a good time to buy lumber. And the buyers that have lean inventories are just really looking for somebody to push them over the edge and make a move. But somebody's got to go first, and we've got, with so much consolidation we've had lately, it's not going to take but one BFS or UFP or somebody like that to make a move to start stocking up a couple of thousand contractor yards, and then we're going to be off to the races. There's going to be an instant supply shortage, and when you take those numbers of large yards compared to the numbers of small yards and collectively put them all together, there's not enough wood out there on the ground right now to give everybody enough to build inventory. I think to build everybody an extra month's worth of inventory even.
Well, what we're talking about here is supply chain, which it's the hot topic now. And it's not just lumber, it's across every industry. The disruption of the supply chain through the COVID pandemic was so significant that everyone is rethinking about how they do things. What was the late 80s and 90s Kaizen, the idea of just in time and try to become as efficient as possible, which is a great way to go, assuming no outside, unforeseen acts disrupt that. What we've discovered now, in fact, I was just yesterday listening to the reports from the automakers where Ford has like 40,000 vehicles that are unfinished because they don't have the parts to finish the vehicle. So anyway, going back to supply chain, I agree with you. I think all consumers of lumber or all people in the supply chain are rethinking where's the proper spot for me to keep an inventory? What's the proper size inventory that I should keep? And we're looking introspectively as opposed to saying, how's my supplier going to do this for me? Because, it's time to take care of yourself. You just got a little messed up. So
I think from the way the lumber gets distributed, if you go mill, wholesale distributor, and then retail on down, there could be a big gap between the retail sector and the wholesale distributor, where the wholesale distributor plays a bigger role in taking more volume. It's going to appear to be it's kind of intimidating because it seems like a lot more risk. But we've just discovered and proven over the last 2 or 3 months that there's value in having the wood on the ground, and you can get it regardless of what the market's doing. You can get a premium and sell it at a profit. I've heard Ashley and Matt and Greg talking about how do you sell inventory that's on the ground for less than what a mill shipment is. And I think those I'm not going to say those days are gone, but without the volatility of the market moving $200 or $300, $1,000 a month, that you have the opportunity to have the wood on the ground and get a premium for it for being able to service those people that want to have less exposure, less risk, and you can get rewarded for that.
So let's stand here today, beginning of October, and take a little look back real quick. The look back is when a lot of the wood that's being consumed today was purchased or prices negotiated for it was in early Q2, was the spring. And let's think about where that market was. We had just come off highs. People were still afraid of the strength of the market potential. The Fed really hadn't started jacking rates too much. They were talking about it. I think a huge inventory was bought. And it actually started at the beginning of the year. That's why we had the run up. Markets go up when people build inventory. Markets go down when they liquidate inventory. There's without a doubt been a massive liquidation of inventory in the pipeline since the beginning of the year till today. And I was on the call with your group, Matt, and this week, and that group was talking about they're not that concerned. They're looking for an opportunity to buy right now, but if it's not there, they're okay. There's not much fear in the market as we sit here today.
I would even challenge my group of guys to say that your opportunity to buy is always going to be $50 lower than where the market is. It's like when lumber was $1,000, $500 was the number everybody said. Well, if we get back to $500, I'm going to load the boat. Well, you're at $500, and now you're approaching $400. If $400 was a number, but there's nothing to say we can't go into the 300s. But it seems like the closer you get to a lower number, there's a reason why it's there, and it's because business isn't as good as it. There's not a panic, and there's plenty of it. There's no urgency to own it, so it's kind of an oxymoron thing when the lumber industry behaves differently when at lower prices we don't want it, at higher prices we want more of it.
Yeah.
And it's really, but it kind of makes sense because you want it when nobody else can get it, you want it regardless of what you got to pay for it. But when there's plenty of it, it's $300 or $400, then there is no urgency. You can get it all over the place, but everybody seems to be able to get enough of what they want right now, but we're also coming into a time when seasonally the market gets bought speculatively, and it'll be interesting to see this year what that degree of speculative purchasing is. But there will be some spring preparation, which will create an inventory accumulation to some degree.
So, just go back to what Tim Hansen, lumber futures strong this week. For the last 2 years, I'm going to say that the cash market was dragging the futures market around. And it really had everything to do with market structure. That there wasn't the visibility into how strong that market was going to be. The financiers really had it wrong. And the people that had it right were the guys in the field putting nails in. Right now, I think the structure of the market, like who's doing what in the market, has shifted. And I think the finance guys had it right. They said, listen, this market is going down. And when you look at who's short the market, which we can see through the Commitment of Traders report put out by the CFTC, Commodity Futures Trading Commission, the commodity funds are short lumber. They will lead the market out of this. So, I think what you're seeing in the futures market could be a real change. We may have just bottomed. Today, we had our first move on a daily basis where we had a higher high and a higher low, higher high on the chart. If everything stays the same in futures.
Right.
I'm looking at that. I'm remembering these conversations on your show this week where guys were like, I'd buy if it's a good deal, but I don't have to. And you just look at the overall price point. Discuss multifamily has big opportunities to get these buildings put up and rented as quick as possible. I think we could be near a bottom here. And if you look at just from a pure math standpoint, the lowest we can go is 0. And we know we're not going to 0 because there's costs involved. So what is the ultimate downside from here? Is it $100? Maybe.
We went to last time we were at $500 before we went to within the last decade, I think, or 12 years. We've been in the 100s before, but the thing is, we've been in the 300s several times in the last decade. So there's no reason to think we can't go into the 300s. So I keep telling people that you're not going to get beat on price from here to the bottom. You're going to get beat on service, and you're going to get beat on not having the availability, and you may have to sit on some inventory that's going to be a little stronger than you want, but being out of wood is not the thing to be at the bottom, near the bottom of the market.
No, being out of wood at the top of the market, that's a good thing.
Yeah,
that's a good
thing. Okay, miss an order there.
Now, that being said, are we going to look at a massive spike here, a massive run? I just don't think there's the fuel in the fire to take this market back to 4 digits, over 1,000.
It's going to be tough too, because Euro's coming like a banshee, man. I've heard boats that are just almost at the port. There's so much wood that's close by that's going to be available from Corpus Christi all the way up to Maine, all around the both Gulf and Atlantic coast. There's going to be wood. There's going to be wood everywhere, and there's no reason to think that's going to stop. There's more coming. The dollar's good for shipping it over here. It's a better place to ship the wood. Yep. But there's also no other alternative. I mean, we're the best market on the planet right now. Yeah,
there's no doubt. We like I said earlier, we're importing deflation. We're exporting our inflation. So it's the best place to bring wood. Why don't we take a look at what you got here on the right side? Southern yellow pine production's becoming more evenly distributed, spreading price changes more evenly. Still weaker overall. What are you thinking there?
There's more production coming on, but just because of the price disparities between 2x4s and 2x12s, and the other widths, 6, 8, and 10 inch, the production was leaning towards 4 and 12 inch because it was $600. Everything else was $400. And now that's coming back into parity a little bit. The production is more evening out between 2x4 through 2x12, a little bit more, just kind of a normal production ratio. But there was heavier production on 2x4s and 2x12s. And while they were falling off, like this week, I think I had 2x4s down $60 and 2x12s down $20 or $30. And the 2x6, 8, and 10 was almost even, and that's probably wasn't even fair. Realistically, they should have been up probably $5 or $10, but it's more just showing the trend. But the 2x10s are
So
still strong, but it's a big mix of interest, and that's just I think it's just in the distribution of production.
when can we expect to see the treaters stepping back in on this, you think?
When I'll make it real simple. When Lowe's and Home Depot when Lowe's and Home Depot declare what they think 2023 is going to be like, there's no reason to build inventory in anticipation of what those guys are going to do until they tell you what they're going to do. And I think at this point they don't know. And it's typically going to be they typically get kind of tip their hand between October and the end of the year. I think it's going to be closer to the end of the year because right now they're kind of uncertain. I think there's a general feeling, Mike, that the market's going to be pretty crappy until through maybe the first quarter, and then the second, third, and fourth quarter, things are going to start getting better. Rates are going to be coming down, and we'll get more back to normal. So I think the inclination is to be ready to pull the trigger and jump and buy a bunch, expecting the second half of the year is going to be better than the first half of the year, and that's probably a worst case scenario, because I think a best case scenario for the lumber business would be that the first quarter is surprisingly better than is expected, because people are holding their inventories down based on builders saying they're uncertain, they're unsure about what's going to happen in the first quarter based on traffic. They're not making any promises, so nobody's got anything to hang their hat on, either from a home center perspective or builder perspective. So the market's really in a kind of a state of limbo. And I think wholesale distributors, and wholesalers want to buy because they want to have products available, but they need a commitment from somebody down the line that says, yeah, we're going to take it. But at this point, it just seems to be kind of in flux. And like you said, about futures could be leading the path up. But there's the funds that are in there with 1,700, 1,500 contracts that are trying to either roll or liquidate is going to put some upward pressure on the November contract, which is going to be kind of unique, because normally November is the low contract of the year, and January is higher. But the way this thing's shaping up right now, it could be where we find January at a discount to November, which would be kind of unique.
The last trade on that spread was 60 cents under, which for all intents and purposes is even money between January and November.
Yeah, and January should be $30 over November.
So let's take a look. Canadian SPF. Buyers of bulk are looking for a reason to take a speculative gamble. My surveys indicate 69% of folks would not build inventory on substantial.
Yeah, that was interesting. I did a Facebook, not Facebook, LinkedIn survey. It said if there was a substantial curtailment announcement or substantial curtailment happening, would you increase your inventory by 1 month, 2 months, 3 months, or not at all? And 69, actually now this morning, 71% of the people said they would not change their inventory strategy if there was a substantial change in production curtailments or in production.
That's kind of interesting.
It is, because it kind of tells you that the dealers are thinking that the reason for curtailments would be because mills can't sell their product and demand is going to be so slow that there's no reason for them to build inventory.
They just think it'll be readily available. All
right,
Western U.S., Katie Green. Quiet production cuts are keeping supply somewhat under control.
Yeah, I think that where Canada kind of blows a whistle and says we're going to be shutting down for 2 weeks and 3 weeks, and it's going to be 23 million board feet of production that comes off. The Western U.S. guys are just, the Weyerhaeuser strike had a big impact on part of that. Is that still going on? I haven't kept up with that lately, but I don't know if they resolved the Weyerhaeuser strike or not. But they had some supply disruptions and just a little bit of curtailments, shift curtailments, have helped the Western U.S. green and dry fir markets not get overproduced like we have in the South, where there's been no curtailments at all.
All right, Euro. What is at the ports is moving. What's coming is troublesome.
There's a bunch of wood coming. Probably about 6 weeks ago, we were talking about all the wood that was at the docks just waiting on boats. Nobody's really said anything a lot about Euro lately. It's just kind of let it lay there and don't let it disrupt anything. But there's a lot of Euro wood that's on the way. It's very close to the ports, and that's going to be a not a sore spot, but a helpful spot if you're looking for lumber, especially 2x4 16s and 2x6, 2x4, 2x6 9-foot studs. There's going to be a lot of those around. But right, I heard from a guy yesterday that said that you couldn't even buy a 2x6 14 anywhere on the ports. They were just out. But it's kind of in a weird spot right now because what's there is just being picked up because everybody that's got any kind of prompt wood's able to get a premium for it. But then there's just so much more coming behind it. It's still kind of one of those in limbo things. You don't know, how much is a lot. Is a lot 50 boat loads, 100 boat loads, or 20 boat loads.
Yeah, the apparent supply curve for Euro is definitely a little different. The port hits, supplies there, as opposed to your sawmill where it's that flat production curve where the saw, you're spitting the wood out. You're gonna have this many trucks every week.
It definitely comes in unpredictable waves.
I mean, I heard something I can't substantiate it. Just someone told me Cape Canaveral had like 6,000 trucks on the ground. Someone else told me that they go about 150 trucks go out a week out of Cape Canaveral. So 150 trucks a day, 750 trucks a week. So you're looking at like 3,000 trucks a month. So a 2-month supply of Euro sitting on the ground.
I'd be hard pressed to think that you get 150 trucks of lumber out of any place in a day.
That is a lot of trucks.
That's a lot of trucks.
But I think, storing 6,000 trucks of lumber, that takes a little bit of room.
Yeah, that's quite a bit. Yeah.
But
I talked to one guy this week that's wholesale distributor. I mean, a contractor yard that said that they invested in a brand new reload facility so they could put their wood for their multifamily turnkey jobs, and they've got 500 truckloads of lumber in one warehouse for jobs they've already bought for and committed for the first 6 months of the year. So there's this perception of pent up demand that I think is one of the things kind of helped the market hold its own here for the last little bit has been that stuff getting pre-bought, because when you can buy it $500 or $600 based on $800 and $1,000, they're just getting it done.
We got a quick question here, and I think it plays into the Euro wood. How much of a floor will the Ian rebuild drive?
I think that's probably a good question, but of more importance is when will that happen? And typically, the first thing you got to do is got to clean everything up, and that's going to take several months. It could take 6 months to get everything cleaned up, all the debris cleaned up, and you got the so much of the damage was water, so it's going to be sheetrock and paint. And flooring is not necessarily structural, but the structural part down around Fort Myers and Sanibel Island was probably where the biggest damage was. So I would venture to guess that it's going to be the summer before we start to see any of that happen, and it could be as much as 18 months.
That seems about right. But there's no doubt, hey, a damaged home, those people need to live somewhere. Florida was the popular place to be moving to, so they will be consuming some wood. Let's jump over to panels. OSB. Buyers are not interested in the open market excesses with a 3 handle on it.
Everybody, I would say, Mike, with that exception, everybody that I've talked to says, I'm going to load the boat at 250. I go, really? Well, look at Western Canada, because they're like 270. You know, load the boat up there, or the Canadian wood's getting into that 270 kind of range, both east and west. But I've heard multiple places this week said if they get $300 landed on 7/16 OSB, they're gonna load the boat. So I think when the mills start to hear that, they realize that there's speculative interest at some point, and it's probably closer than further away. But I mean, we're $50-$60 away from getting to a point where a lot of people are interested in speculating on OSB. And I think OSB is kind of one of the favorite things to speculate on because it's just one SKU. It's one size bundle, so it's easier to warehouse and easier to keep track of. Either you got 7/16 for sheathing and underlayment, and that's unless you're doing zip wall or some kind of zip system or something like that. It's an easy thing to speculate on, and it's and it's the least expensive. So it's probably, I think we're probably pretty close to a place where OSB is going to start finding some speculative interest.
So, Matt, what do you think of the offshore plywood? Specifically, I'm looking at like the Brazilian plywood. I have heard some birch plywood, well, Russian fiber birch coming through China, hitting the U.S. Strong dollar makes us attractive. I mean, do we have the potential to flood the panel market here and just drive prices into the ground?
I don't know. I would be skeptical if I was in the foreign plywood business about thinking that you're gonna take the OSB market over in the U.S. because that's the favored panel of construction, and there's always it's so easy to derail a foreign product when you start to come bring into question quality and grade and all this kind of there's just enough doubt to say, well, somebody else has got to go first. I'll start using like Brazilian plywood's basically a year old of being pretty dominant, not dominant, but having a prominent presence in our market. So I think there's still a lot of people that are uneducated about it, unaware of it, and every time there's a new product that comes in, even you think about when OSB was new, it took a while for that to just displace half-inch sheathing, and now now sheathing it's not an inferior product, but it's kind of considered a secondary product to OSB.
It is.
So
It's crazy. If you would have told that to anyone 20 years ago, they would have said, "Oh, I'll take plywood over that." A friend of mine calls OSB beaver puke. That beaver
but
puke.
take a hammer. I was just thinking about if you take a hammer and you knock the corner of a piece of OSB with a hammer, it's going to break the corner off. If you do it on a piece of plywood, it's not going to do that. But it's just kind of one of those crazy things about how the lumber is. It's just what's accepted, what's normal is what we go with. But I think the import stuff is probably going to have a more difficult time taking over market share than.
All right, so your last thing here, no futures, 320 or 500.
Yeah, if you look at that big channel on the outside channel, the bottom channel projects 320 for a bottom within a reasonable time frame, and 500 for a top, and we're right in the middle there at we were. Now we're up a little bit more. We're 430ish today, so it looks like from the slope of the channels, you can see the down sloping channel on the top is steeper than the bottom sloping channel on the bottom, and it's almost like the bottom is finding a leveling out place, where the top is sharper down, but it's meeting more resistance across the bottom. So it looks to me like it's a chart formation that's setting up to break out to the top side.
Well, and if today's any indicator, we have broken out. Last trade 460 in November. Last trade 464 in January. So I think the 500 is
500 tomorrow.
Yeah, exactly. Direction and momentum. Downside momentum is accelerating. Wholesale suppliers think LBM should be buying. No example. Setters only one bottom. Big contractor mostly lead the charge. Someone who can all the prompt wood at once. There are only two choices. So
that's what I talked about earlier. The two choices I think are clearly BFS and Universal Forest Products, because their ability between the two of those locations, either one of them could single-handedly turn the market around with just an inventory accumulation position that they just came to market for 3 days, and it would take, I don't know how long it would take for either one of them to get in a position where they could be in an inventory accumulation position and get anything done. If you think about the number of yards that there are, there's so many other locations that have 80 and 100 yards that aren't even considered. I mean, they're big contractor yards, but just those two guys alone are enough to swivel this market on a dime and change perception in a hurry.
Yeah, I think that we're on a bit of a powder keg, and until something triggers it, we'll probably drift lower. Maybe we're in the midst of the trigger right now. I think it's probably the trigger is going to come out of the financial markets. Tomorrow's jobs day, unemployment report. If that report shows that the Fed's effect of raising rates is working, the Fed probably will have the end of the raises in sight, and Wall Street will probably like that. which may spill over to our market. If that number comes out stronger than anticipated, the Fed's going to stay the course.
Yep.
So, all right. Any last words, Matt?
I think we're closer to the end of the financial panic part of what we had in front of us before. I think we can see the end in sight more than more trouble. We're not past the trouble part, but you can see the end of it, and that looks pretty positive for housing and for lumber.
Yep. All right. Sounds good. Thanks everyone for listening. As always, Materials Exchange appreciates the support. I know Matt and his loyal followers also appreciate the information we get here. What I'd like to stress is information is king, and the more we all work together and share this information, it's going to help everybody. So we appreciate you listening in and making comments, participation with Matt's surveys and all of his products. That's going to be good for everyone.
Thank you guys for coming and participating. Thanks for the comments too. That's inspirational.
Absolutely. All right. So check out now, and we'll see you guys next week.
Thanks, guys.